Zodiac Trader. So today in this episode, we're going to talk about the latest update on the S&P. Apologies for not making any new videos lately because I was extremely busy with so many things. So today we're gonna look at the S&P as I have predicted, and it has reached another new high. Right now, the S&P is trading at 5,500 point, and we are likely to see a correction. Some may say that could be 5,500 points, and some people say it might be 6,000 points. Either way, I believe this is one of the largest man-made financial bubble we have ever seen in entire financial history. Because right now we are seeing uh, most of the stocks don't really we don't see much of the stocks go up, that we are actually seeing a lot of value just go to the Nvidia and other AI related stock. So the concentration of S&P became extremely high, and which is the reason why it would be extremely dangerous if someone wished to keep longing the S&P, from my opinion. And there are several figures and also several data, very important data, to show that indeed the U.S. economy is right now having to set back, or just put it this way, the U.S. economy is having to correct itself. So, okay, so let's look at today's content. So, first of all, we're going to look at the U.S. housing permit. So, right now, we're seeing, because of the high interest rate, the housing sector started to get impact. And right now we're seeing the housing permit fell by 5.5%, which is 1.27 million in May, the lowest. So the housing permit actually reflect the willingness of the real estate developer to put the money inside developing these properties. If the real estate developer don't see rates going down any further, or they are seeing, I would say, higher interest rate risk, or they probably slow down their construction, or maybe because they have a very tight budget, though that's or maybe they are quite pessimistic of the home sales of the United States. And most of these factors would actually impact the real estate developer from having to increase its housing permit. And so, therefore, we're seeing the housing permit, it's trading at 2020 low. That means most of the housing developers are reluctant to put more money developing houses. So at least you can see the willingness of the real estate developer has diminished quickly. And right now we're seeing the inflation in the US still not going back down, because we're still seeing a 3.3% inflation. And right now, I am currently living in Irvine, and the inflation here is simply ridiculous. We're seeing really expensive stuff. We're seeing, like $5 pickles. We're seeing like $4 to $5 pickles, and like $4 to $5 cucumber, and a lot of vegetables. So things are getting more expensive, and people are actually getting more expensive of these car insurance paycheck, and also included health insurance, etc. Because the interest rate has climbed, has been climbing up ever since. So that's why we're starting slowly to feel that, and right now it has been accelerated. Like more people are feeling more stressed to pay off their bill because of the high interest rate. And because of the high interest rate, it's difficult for the Federal Reserve to cut rate any sooner. And as I have predicted, the Fed has paused another month, and they are that the Fed is still like BSing that they will have another rate cut anytime sooner, which I don't likely to think so because right now because inflation is still high and there is no point for you to cut rate. And some people say it might be because of the economy. If the U.S. economy is hitting like a hard landing, they might they may they might bring a rate cut like any time. But I don't think that's the case because the inflation should be the most priority for the Fed when that should be their priority, their prior concern instead of just cutting rates. I mean, like if you cut rate and then the inflation climb back up and people going to blame everything on the Fed. Obviously, the Fed doesn't want to get the blame, so don't think that's not going to happen anytime sooner. So people who are expecting for a rate cut, right now we can see the bond yield, we can see the financial market. People don't actually agree, so especially the real estate developer and insurance salesman or say insurance company, they've been suffering out of their balance sheet because they have to bear more of the interest rate risk. They have to improve the risk premium, and therefore the insurance become more expensive, and that's hurting the willingness for people to purchase more insurance. So that would be a problem for the insurance company because the insurance company would try to put that risk premium on their insurance, trying to sell to the people, and people would be like, "Oh, I cannot afford it, and how about just cancel my insurance plan?" So that's happening. So you can see from this year, there are many like insurance companies that are suffering a lot of losses on their balance sheet. Okay, and it's time to move on. Like we can look at the job market, initial employment claims. And I've been saying this for a long time. In the previous video, I mentioned about like the non-farm payroll kind of job positions, and we talked about how the Labor Department in the U.S. actually fabricate and use different method to kind of sugarcoat the jobless number. And I think one of the key thing is that they put in as long as you have rollable or say open positions, that if you put someone on their position and if that position is able for someone to work and if the company is willing to hire, that would count to be a job claim. Okay, that would be count as a I would say effective job position. But the case is that people, for example, like there are many positions that you tend to have a very very big, I would just quick current ratio. Like people come to this position and then they will be laid off very quickly, and soon there will be other replacement of this certain position. For example, like Amazon, if you like wrap up the package in Amazon logistics center, you are basically like I would say you're just a mechanic part. You can be replaced anytime. Like they could always find like more immigrants who are willing to do that, to do your job. So uh, can you count that as a job position? Can you count that as a open job? Of course, you can count that as an open job. But the problem is because this kind of job position it comes and go very quickly, it's pretty difficult to measure the job market, to be honest. And right now the US is suffering. Like I go around and see a lot of restaurants still hiring for more laborers because they cannot find any. And the fact that restaurants it's difficult for restaurants and food chain to survive is because the labor cost has increased significantly. There are several states their minimum working wage has been increased. So if you are the owner of a food franchise or if you are a restaurant owner, it will be extremely costly for you to find people to work in your restaurants, and it would be really difficult for you to afford because the minimum wage has gone up, and that means the cost of your restaurants also go up. Therefore, your profitability of the restaurants will shrink. So this is why you have these job wage growth, which is not good. It only happened with the like kind of low end job. It doesn't really happen to we were talking about like mid kind of or mid high kind of kind of employment job. We're talking about like for example computer programmer. We're talking about financiers, bankers, or etc. These kind of jobs, from my understanding, I have a lot of friends who working for Wall Street, boutique bank, bulge bracket, you name it. These people, most of their bonus and their, I would say, their welfare has been deducted. Like, or either they got laid off, and then they will probably get an offer very quickly. But the fact is that most time the next offer wouldn't be that profitable. That's the case. So I would say, if you're the guy who are waiting for a layoff, like in United States labor market, in the job market in US, it is quite common for you to get layoff. And the thing is, if you want to measure that kind of layoff, you need to know, okay, so I got laid off today, and because internet company is not doing good, they are kind of having these position cuts. So you're probably on to the next job. So the problem would be the next offer. Would that be better than your previous offer, or it would be worse than your previous offer? So we're talking about like middle class strong. Is it a strong middle class economy or weak middle class economy? So apparently, from because of the inflation, because of the high interest rate, because of the cost has been gone up, and therefore I am actually seeing U.S. economy is more fragile. It's been becoming more like it's becoming more like a weak middle class uh, economy, because most of the wealth just kind of like centered, and you see most of the money just flow to the stock market. It flows to the real estate. Right now we're seeing these historic maybe 6,000 points, and that is ridiculous. Because if you look at Nvidia, if you look at all these companies, these AI related companies, I'm not saying they're a bubble, but if you put like if you believe these companies more valuable than the rest of the companies inside of S&P 500, I mean, like, think again. Like, sometimes if you're a trader, you meant to ride the bubble, you meant to enjoy the bubble, not necessarily it's a good time to short. But now I am seeing a bigger bubble, and I believe it is a good time for you to position some bets, to buy yourself some hedges, and to place the short bets against the U.S. market, because it could be a most profitable short trades, and most probable short side trades in the year of 2024. So that's for today's video. We talked about how the S&P markets is likely to get topped, and we're actually foreseeing a huge correction, approximately around 10 to 20%. And I think people who have watched this video should get mentally and physically and financially prepared for this correction. So thank you guys for watching this video. I will see you in the next episode. If you like the content, please subscribe and click that like button for me. I will see you in next episode. Goodbye.